Okay, so what is Forex? Okay, so Forex is an online market. Now we have a few online markets. We're going to start with the one that everyone is probably most comfortable with or knows the most, is the stock market. Okay, so the stock market is simply a market where we can buy and sell stocks of a company at a different price and make money off the company going up in value. Okay, now with buying stocks, it's necessarily overall it's low risk because unless the company really goes bankrupt, over time you sort of build up, it grows with inflation, it grows with the economy, it sort of grows with the world itself. So you can lose money very easily, but you're not going to be losing money if you hold it long term, if that's your game. The reward is also long term, so you're not so much going to make money overnight or make money, within the same week. It does happen when companies, first go in the stock market, or when big news events come out, it's possible to have these spikes, but not so much. It's normally steady growth over time, okay? And when you usually invest into the stock market, in order to get some decent return on your investment, so ROI, you technically need a big income or like a big startup investment capital. Okay, so if you're going to invest, $100, $200, that might not be in your favor or might not be in your interest because you're not going to get that much return off it. Okay, so usually people invest like $10,000, $20,000 in it, or 30 or even more, because over time they get more money from it and it becomes worth their while. Okay, so stock market is more attracted to an audience that is a bit older than us teenagers, 20, 30-year-olds, because they have $30,000, $40,000 to put away. Most of us don't have 20K we can just put away and not touch for a couple of years. Doesn't really help us at all. So people that are probably about to retire, people that have built up a lot of money over time, they like the stock market because it's safe and a good way to make money. And you also have dividends, so you also get paid quarterly for investing in companies. Okay, which is a really good incentive. Yet again, mostly attractive for the older type of people that can have money to put away for that long. Okay, the next market is a cryptocurrency market. Okay, now this is sort of new. In the last couple of years, with Bitcoin hitting to 80K all-time high, it sort of just came out recently. Okay, now this is basically just buying and selling different cryptocurrencies, and cryptocurrencies are just online currencies that people make, and then you can just buy a few when they first begin and hope they go up and stuff like that in value. Okay, now the thing with cryptocurrencies is it's really high risk. And what I mean by that is that when you have a stock, it goes up gradually over time. Okay, with cryptocurrencies, it can go up and it can go down really, really quick. Okay, we've seen that with Bitcoin, we've seen that with Ethereum, all of them. And why is that? Because it's so volatile. There's so many people buying and selling it that it just moves like crazy. So you have a really high risk, but with high risk comes high reward. Okay, and what I mean by that is you can make a lot of money with those massive spikes if you're on the right side of the market. If you're not, it could be seen as problematic. And also the good thing about cryptocurrency is you don't need that much to start with capital. You can have $100, $200, $500. Obviously, the more you have, the more money you make. But people tend to like it because as teenagers, we want to get rich quick, and this is naturally. It's not the easiest way to do it. It's not even an easy way to do it. It's quite hard. But if you are on the right side of the market, you can technically make 20, 30K overnight off, $1,000. Like I've seen people do it. I've heard of people do it. I've never done it myself. But that's the assumption. That's sort of the idea of how cryptocurrencies work. Okay, so you can make a lot of money with all the hype, including that high risk, but you get high reward with not so much money to invest in it. So that's typically, addresses the audience that want to make money quick, want to just, skip all this hard learning part and just get straight into it. That is what they're attracted to. Okay. Now the last one is where we come in. Okay, so we are the Forex market, or what we're doing now is the Forex market, what I do, okay? This is buying and selling currencies, okay? Like the Australian dollar, the Japanese yen, the Swiss franc, the USD, all those ones are different currencies, okay? And we're buying and selling the rate or the value of each currency against each other, okay? Now the thing with the Forex market is it's medium risk, okay? Because you have the ability to manage how much money you want to lose and how much money you want to make in what we call like a risk reward setup. Okay, now if done properly, you technically can't sort of lose a lot of money if you're smart about it. Okay, but naturally people blow a lot of accounts, lose a lot of money because they try to use the cryptocurrency analogy of trying to get rich quick into the Forex market. Does not work like that. Okay. And the good thing is also it's short-term reward. So I can, make $1,000 within a day or 2 days or within a week and get that back the week after, straight in my pocket, straight for me to use. The stock market is not like that. You have to wait a long time. Okay. Forex market, short-term reward. Also small capital. So I can start with $100, $1,000, $10,000 and then make money like that. But the thing with Forex is because we control our risk and we try to risk a couple percent of our account to make a couple percent more, the bigger the account you have, the more money you make. Okay. So if I make 1% on my Forex trade on a $1,000 account, that's $100. Okay. Or $10,000, that's $1,000. And it builds up a bit more as you go on like that. Quite simply. Okay. So that's the Forex market. And sort of the way it gets attracted to us as teenagers is because we don't have a lot of capital. We want to see money in our account the next week. And the idea of how it works is you're on your phone, you're on your laptop, and you make money like that. Okay, so it's naturally quite attracted to us as teenagers. As I'm 23 now, so us 20 to 30, where we want to make money from anywhere in the world on our phone, on a laptop. So the 21st century allows us to do. And we want to see the money in our account next week without risking too much and without using too much to start off with. That's why it's sort of become a big deal, because in its nature is very attractive. Okay, now the reason why the Forex market is naturally such a big market and why it's the biggest out of all of them is because 10, 20 years ago, naturally, the way the economy worked was a bit different. Okay, so we have what we call now economics of scale. And globalization. Okay, so what that basically means, those two phases, is that if you had a clothes company, let's say you were manufacturing clothes, okay, 10, 20 years ago, what you would do is you would find a factory, you would organize the manufacturing to occur in the factory, and then you would obviously sell the clothes online or sell them wherever you can in a retail store. Okay, now let's imagine that in a high-rise building. So we're at a high-rise building. And it was a clothing company, okay? You might have the bottom level to be the showroom or like the retail shop. The second level could be research and development. The third level could be customer support. The fourth level could be, manufacturing. The fifth level could be design and photo shoot. The sixth level could be headquarters. Seventh level could be, whatever. You have this company all within one area actually making and manufacturing these clothes, okay? Now, with the 21st century, with this globalization and the ability of the world resources to be used, we now have companies like this. If the clothing company existed now, it might have his headquarters in London. It could have his, manufacturing in China. His core center in Japan is, its showroom in all the countries altogether. It's research and development in Australia. It could be anywhere. And the reason why this is available to us is because we have a market where we have a technology where we can actually transfer currencies instantly without anyone else knowing that we're using different currencies. Okay, stuff like PayPal, stuff like online shopping. We don't really know that we sort of move currency so quickly, but we do. So I was at Google, right? How much money goes through a Forex market in a day? This is always rough, but today they say usually around $6.6 trillion. Okay, so if you have a market where $6.6 trillion of money is going through every single day, you can imagine how much movement of the price happens. Okay, and what we call that is volatility. So the movement of the price is volatility. Forex market has high volatility, meaning it moves a lot. Now, whenever it moves, we have opportunities to make money. Okay, so what we do in the Forex market is, as people that trade it, like myself, we just look for those opportunities. We make money off price going up in value, or we make money off price going down in value. So what is Forex? That's basically how it works from a standpoint perspective. And let's dive into the next one.